So one of the things that I wanted to kind of start with, just from a level set, how many here in the audience are familiar with, obviously, faster payments, real-time payments, kind of familiar with what it is, what it's not? Good. So from a perspective that the audience is quite aware or leaned in to faster payments. So this is really the panel discussion of what we're going to talk about. The theme is faster payments here and now. My name is Wayne Brown. I'm the managing partner of the Walker Group. The Walker Group is a fintech boutique consulting company that really works with fintechs and helps fintechs to partner with banks, and so on the payment space. So I'm going to introduce the panel. I want them to get a chance to introduce themselves and just kind of give a quick overview of what they do on their day-to-day. So let's start with you, Deb.
Hi, I'm Deb Baxley, and I'm a partner with Pagility Advisors. And just coincidentally, the way Wayne and I met many years ago was a few of us formed a group, and all of you, well, anyone can join. It used to be just New York-based, but now we have virtual events. It's called NYPAY, NYPAY.org. We have networking events about once a month, and I was one of the co-founders about 11 years ago. Can you believe we've been doing it that long? And that's the way I met all my business partners at Pagility, as well as how I met Wayne. Excellent. So I've been in the payments industry for, somebody told me, just say over 20 years and kind of leave it at that. But I've been a consultant pretty much the whole time. I was with IBM for a long, long time and consulted to many large players, mostly banks, acquirers and issuers in 15 countries around the world. I also worked for Capgemini in the US credit card practice, and then formed Pagility Advisors with those partners from NYPAY 7 years ago now. And we do strategic consulting with fintechs, anything to do with payments. We do market research, strategy, cost takeout. We work with VCs and private equity. So it's been a really interesting ride and a lot of interesting work that we get to do.
Great, thank you. Richard.
Thanks, Wayne. Appreciate it. Thanks, everybody, for being here, and I'm certainly happy to be here as well. So I'm Rich Dooley. My picture up there says I'm with Regions Bank. I'm in a weird position this week. I've actually left Regions. I'm starting at another bank next week. But I've been in corporate banking, treasury, and payment sales for a number of years now, about 12 years, across a couple different banks. Obviously, this is one of the areas that I focus on, speaking with clients, educating them, talking about this in the market that's just come out. So I've been kind of following the fast and real-time payments world since really we started talking about it in the corporate banking space. And I've gotten involved with some organizations inside and both outside the banks that I've worked for, particularly the Accredited Standards Committee X9 group. We've done a lot of work on ISO 20022 as well as real-time payments, and more recently, which I'll talk about a little bit, request for payment, some work there recently, which is kind of interesting. I have usually a weekly blog that I post, or a newsletter on LinkedIn. I'd love all of you to subscribe to that. It's called The Signal. I just try to provide as much information about this space. It's really just links to articles and some commentary. It's kind of cool to do. It keeps me up to date on different things and keeps me, kind of my finger on the pulse of this market, which is obviously very dynamic and growing fast. So I will continue to be in the corporate banking space for quite a long time, focusing on this and really pushing out education, which I know we'll talk about some here, but that's where the corporate world really needs to be right now, is being educated and learn about these things.
Right. Charles?
Thank you. First of all, welcome to Atlanta for those not here. I am Charles Potts, Executive Vice President and Chief Innovation Officer for ICBA, the Independent Community Bankers of America. I'm an accidental banker who became a reformed banker, who became a fintech entrepreneur, and had incredible blessings to work with a number of really amazing companies in and around the Atlanta ecosystem and globally as well. And now I get to sit in this really cool place representing some 5,000 community banks and helping them find meaningful innovation in early stage companies to address a lot of their needs and work in this very robust ecosystem where we are constantly challenged to really figure out the difference between the shiny objects and real solutions that our banks can use. And I appreciate MPC and Wayne for allowing me to participate in this panel today. Thank you, Wayne.
Thank you. So let's go deep into with regard to some of the questions that we have for the panel. You can see their years of experience and their involvement in faster payments. So let's start with you, Deb. You, one of the things that you are also involved in is the U.S. Faster Payments Council. So can you just briefly tell us a little bit about what the Faster Payments Council is doing, their objective, and what they're doing in connection with faster payments and why that is relevant?
Yes, I'm a big fan of participating in these volunteer groups to help the industry. One is the Faster Payments Council, the other is the U.S. Payments Forum. So the Faster Payments Council was formed out of the Federal Reserve Faster Payments Task Force. And by chance, was anyone here on the Federal Reserve Faster Payments Task Force?
Yeah, we had
One in the
representation.
back.
Yeah.
Okay, great.
Yeah, and Peter Tapling, I don't know if he's in the room or not. Anyway, one of the key recommendations from that task force, when it ended like 4 years ago, was to form an industry group that, well, really the focus is on collaboration. So it has close to 300 members, 200 members, I'm sorry, nearly 200 members, and they're from all over the ecosystem. So there's real value to bringing, for example, issuers, merchants, networks together to work on common industry problems. And the focus is on problem solving, education, both for public, consumers, as well as policymakers, and looking for best practices. And there are 10 work groups, and I'll list them for you. There's cross-border, there's digital assets, there's directory models, which I know Peter Tapling was the leader of, education and awareness, financial inclusion, fraud, which is the group I'm in, operational considerations, QR code, recurring payments, like for Netflix or something, and then APIs, and there's, I don't know if Moa's in the room, she's one of the leaders of the API work group. So if you go to the website, first of all, I would, again, encourage you to consider joining, but there are two parts to the website. There's publicly available information, and then there's more in-depth information available to members. There's some infographics you can go look at. So for example, one of the really cool deliverables was on use cases that's come up over and over again yesterday and today, real-time payments use cases. So the whole alphabet of use cases, account to account, B2B, B2C, C2B, C2G, everything else, and P2P. And there is a tool with an interactive repository that you can do filtering and pull down of over 130 use cases. And we feel like, you know, just describing these use cases will help drive adoption and facilitate the business models, transformations that organizations will need. So just for one example there, B2C includes account transfers, disbursements, loans, insurance payments, which was in a panel earlier, investment, lending, not-for-profits, pharma, real estate, gig economy, payroll, and point of sale. So if you go to the website, you can play around with that and see what are some of the use cases for B2C as well as all the other ones. So that's really cool. Another one is directory models. Directory models, you know, the use of aliases is really important for the adoption of real-time payments. And so what that team did was look at 6 models in other countries. They looked at BISM in Spain, Interact in Canada, M-Pesa in Kenya, Pix in Brazil, UPI in India, and Swish in Sweden. And all the they identified a bunch of what they called beneficial characteristics for directories, and they found that all the directories had routing accuracy, which is, that's a good thing, have accurate routing, aliases, the prohibition of data mining so that somebody couldn't hack into it and mine the data and do something bad with it, user-controlled profiles, confirmation of payee, and request for payment. None of them supported multiple routing, which we thought was interesting because in the US, you know, maybe one of the things we might want to do is have routing across Zelle, RTP, and or FedNow, but nobody's doing that yet. We always have to change the game, right? E-commerce and point of sale were supported, bill pay support was limited. Okay, and then the third one I wanted to point out is QR codes, because there's a whole work group on QR codes. QR codes, you know, especially in the beginning of adoption, should allow for easy initiation of faster payments with no extra equipment. We used to call it the poor man's NFC. QR codes. So the deliverables and the infographic explore the advantages and challenges for all the stakeholders, the merchants, the networks, et cetera, and should include accurate routing. It explores static versus dynamic codes, merchant versus consumer presented, security and privacy requirements. So that's just out of all those work groups, there's a lot of stuff going on. It's really valuable stuff.
There's a lot going on there. Yeah. So thank you for bringing that out. Let's kind of talk a little bit about on some of the examples in which we see. Richard, can you talk a little bit about what you're seeing regarding some of the recent areas of the corporate interest in real-time payments?
Yeah, so there's a few, and some of them, just the standard ones you've been hearing for a long time. So as we've gone through this at banks, we've had to build a business case, right? And so that has required us to go out and get use cases, and that's required us to talk to clients. Hey, what are you guys doing? What are you thinking? We're picking you as a larger corporate or something like that. So the standard ones, insurance, which you mentioned, the emergency type payments in a disaster, right? So get the payments right to the folks that need it the most. You can't send a check. Want to do a real-time payment, those kind of things. We've also heard from the FI, like broker dealers, about funding accounts where they would not only for like an individual like me or somebody who wants to get money into my Fidelity or out of my Fidelity account, but sending an actual request for payment to the clearing organization, they get that and they fund it right away, so it knows exactly when those dollars are coming in. So there's the standard ones in some healthcare. We've heard about that. I've been involved in commercial real estate for a long time. There's a lot of interest there when it comes to the return in the multifamily space, particularly to return security deposit dollars, right? So now it's ACH, it's sometimes check. It doesn't happen that often, a couple times a year, but it can get ugly because those people move. They're in the student housing world. They're students. They go home, or they just go to another place. So whenever we've talked about this in the commercial real estate space, there's been real interest to get those dollars back. That conversation, I recall a number of years ago, kind of started with the possibilities of Zelle, but now it has come to, okay, can we do a real-time payment to that exiting tenant? A couple recent ones, real world, that have just recently happened. We had a couple where a vertically integrated affordable housing client has a construction arm. Material comes in over a weekend. It got to the port sooner than they thought. This was down in Texas, actually. Delivered up to them in the Houston area. Vendor wanted to be paid. It was a weekend. They figured it out, but we had been communicating some of these things to these clients, and this guy heard it and called us Monday and said, well, I'm going to sign up for this. He was excited. The reality is, we're not 24/7, 365 yet, but conceptually, yes, it would work for that client, that customer of ours who's got a vendor who might deliver on the weekends. Another one recently was a logistics company. So this is an independent logistics company that has contracted with independent truckers. And it's been a real headache for them to pay these truckers as the materials get delivered. And I mean, there's no set schedule for the delivery of this stuff. So these are independent truckers. Here's the load. Get it there in X number of days. And that might be midnight on Wednesday, or might be, 5 a.m. on a Saturday morning. They want to get paid. These are folks that need the dollars. So this is a client that came to us and said, hey, we've heard about FedNow, we've heard about RTP. Will this kind of thing work? Yeah, it will. Again, there's a lot to work through there in terms of what can happen. There's a lot of other considerations. I don't want to talk about it right now, but before we're done, I want to talk about the liquidity factor of all this for not only banks, but clients, good funds. This is all in a good funds model. So we have, I think clients don't quite understand that yet. Like, you've got to fund to the dollar and then some to send anything out, right? To do any kind of payment. So, but those are some real world examples, and we're seeing a little bit more. There's areas that, there's an account to account, like you talked about, some of the broker dealer stuff, peer to peer. I've talked to some colleagues who have seen it a little bit in gaming, where, you sign up with this gaming organization and you want to fund your account right away to start betting or whatever you want to do. Or if it's one of these deals, I think we've all seen them, hey, sign up for account, we'll give you a free $50. And that gaming organization wants to send the $50 right away and get these people started, gambling right away. So those are some of the real worlds that we've seen, and there's still a lot of conceptual examples out there, but that's some of where the actual rubber has hit the road.
I don't know if you were here last year, but there was a speaker from, I think it was called Uber Freight.
Yeah.
Exactly. It's almost like earned wage.
Yep.
They want to get paid the minute they drop off.
Yeah.
And I think Uber sold that, but I'm not sure. It was pretty cool.
I know, and that's another one, obviously, the earned wage where you see all that stuff. But yeah, that's another example. And then companies are starting to think about this, like, hey, can we do this and make things better and faster? And there's also, again, we'll talk about this, but there's also a lot of working capital considerations, and that's another factor I want to make sure we discuss.
I think these examples are good because so many people are wondering that as far as real-time payments, faster payments are so deferred, but that's why we have the theme that the here and now. The reality is now. Charles, why don't you talk a little bit about on the technology side? As systems or technology systems seem to kind of evolve, obviously you may see or think if there's some major challenges that could exist because adapting faster payments, obviously they have legacy systems, that could be a challenge. What are you kind of seeing with regards to the technology and then also the back-end legacy systems and how do you think this is going to work?
Well, one of the things I think is important when we talk about real-time payments is to recognize oftentimes the eye of the beholder is what is important when discussing what is a real-time payment. And the reality is, for decades, we have had, in the eye of the beholder, expedited payments, emergency payments. These kinds of things have existed. And the evolution now, and Richard talks about this very, very well, is moving from things that were kind of crisis-oriented to business as usual. Mm-hmm. And what are all of the pieces that have to be there, good funds model, in order for this to really reach kind of a business as usual practice. And the technology infrastructure has got to catch up with a lot of the change in the behavior and the use cases in the eye of the beholder. The biggest problem we have for most people are what we typically talk about in the on and off ramps and the toll booths. So it's one thing to have these networks, whether we're talking specifically about TCH and their RTP, or we're now talking about a schema like FedNow, or we're talking about legacy payments networks. It's another to create really the usability, the on and off ramps, the behavior monitoring capabilities, so that whether it's a consumer or a business and the financial institution intermediary, you're creating a more frictionless, easier process. I remember some of the early days, of electronic bill payment, and when we started to roll out expedited payments. Well, most people don't know this. There was a big check printing center right in right next to the FedEx hub that was basically sticking a bunch of checks in FedEx envelopes that were showing up at your doorstep. That was real-time payments in the mind of some people, right? And so now we need to catch up with now what consumers and businesses really think they're getting when we talk about real-time payments, and that's going to be. That's still a lot of heavy lifting with the massive amount of legacy infrastructure that sits there from a user experience perspective. Treasury platforms, digital banking platforms, all of those things have to be addressed.
Yes, very true. Richard, you had mentioned with regards to the whole cash flow aspect, the cash conversion cycle implications of a greater RTP adoption. So can you talk a little bit about what you see about that?
Yeah, obviously there's big cash flow and that cash conversion cycle implications. So I'll preface it by saying, a lot of you probably know who the Hackett Group in here is. They do a lot of these working capital studies. Well, the most recent one, 2023 working capital study, about 1,000 companies. There's a lot more working capital tied up now. And the main reason is that the one element of the cash conversion cycle, the working capital, that deteriorated significantly, and all my Signal readers would know this because I put the article in the last week's version, is that a DPO. DPO deteriorated by almost 5 days.
And define DPO for those who...
So days payable outstanding, basically what the study has found is these corporates have extended their payments as far as they can go. So they want to extend those payments as much as they can, take as long as they can to pay their vendors, and that withdrew by about 5 days. So that tied up more working capital and gives them less opportunity to earn rates or whatever else. So having said that, the cash flow implications are really going to have to be something that CFOs and treasurers really think about when it comes to their suppliers and vendors. So if you've got a strategic supplier or vendor that comes to you and says, in light of faster payments now, real time, Fed now, maybe they're very astute and sophisticated and they know the space, we want to get paid faster. And as the CFO or the treasurer, and if that's a strategic vendor, you're going to probably say, okay, fine. It might be on terms, it might be right at the end of the term, instead of an ACH at the end of terms, it might be a real-time payment. Or it might be, they might say terms have got to change from 30 days to 15 days or 30 days from 45 days, whatever it is. And CFOs and treasurers are going to have to figure out what percentage of their vendors and suppliers they're going to do this for. And so, okay, that's going to decrease DPO even more, all right? And then they've got to think about the implications from their balance sheet standpoint and a reconciliation standpoint. They typically use accrual accounting. Well, now you got to go to a real-time ledger. This might be all fine, and CFOs and treasurers might say, okay, we can do that, but they're going to have to think about this, right? And so that's a real implication. So it's really going to be from the larger companies to the smaller vendors and trading partners, cash is going to be going out faster. Another interesting one that I actually read about, which I thought was very interesting, there was an online retailer, and they're in the jewelry business, right? And so they take online orders, or they come up with maybe a line or something, and they have to go to a manufacturer. And typically manufacturers in that industry and a lot of others are not going to start production until they get the payment and reconcile it. Maybe it's a partial payment, maybe it's a full payment, whatever. I'm reminded of Scrooge in A Christmas Carol when he says, I don't deliver until I have the cash in hand, right? So that's what they do. And so in this situation, that online jeweler is saying, you know what, we could actually use a real-time payment to pay these guys faster and reconcile it and get production going faster. And that might even have implications for them if they hold any inventory or just a cost perspective, because if that manufacturer has to go out into the spot market for a precious metal, gold, silver, whatever, and it's more advantageous today than it is tomorrow or next week, you know, if I send them payment via ACH today, maybe it gets settled tomorrow afternoon, but could be Monday. And then they go out to the spot market and something happened over the weekend, and now gold is a few pennies more expensive, right? So that has, and then they're going to get that inventory faster if they do this quicker. So that turns around their cash conversion cycle, makes it better. So there's obviously good implications for a company like that, but implications for those who are going to be sending out a payment to really think about what's this going to do to their balance sheet, but in a strategic light, because I need that supplier, I need that vendor, I got to pay them, and I'm willing to do it. So those are some of the things that I've seen.
Well, it's an interesting battle with a lot of our community banks who have a lot of really small businesses as customers, and many of whom are suppliers to some of those larger retailers. Northwest Arkansas in particular, there is an interesting battle going on, and this is where a lot of them are looking at it. So as we try to compress the terms, we try to compress the net days, what is going to happen to some of these smaller suppliers? And I know that large retailer is really concerned because they've always demanded net 30, but they extend net 180. Right, so this is going to be a real challenge for a lot of really small businesses who are dealing with those kind of strong arm, large retailers. And I think to your point, one of the areas that I think a lot of financial service treasury management players, CFOs, need to really look at is how can you play with the terms and tie it to the use of this kind of real-time payment product. So that because look, we all know the wholesaler wants to get paid immediately, buyer wants to wait till the last day, right? And that's a big challenge, and I believe this technology can help smooth out and improve a lot of that, and that's where we're seeing a lot of the investigation happening.
We talked about the freight earlier, and that was one of the questions I had was. They moved from net 60 to immediate. So I said, did you give them a haircut on what they were getting paid? No, because there's a shortage of drivers. So they can't strong arm them so much like they used to.
Interesting. How many in the audience are concerned about fraud with faster payments? Oh, okay, I see some hands.
Yes.
Hands.
Yes.
Deb, you want to talk a little bit about some of the things that you have seen with regards to some of your studies with regards to fraud specifically and faster payments?
Well, I'm glad you asked that because fraud has come up in like every single panel the past 2 days. So I was the co-chair of the Fraud Information Sharing Work Group at the Faster Payments Council, and we did several deliverables. One of them was a survey of, well, it was in 2021, so the early banks that were offering real-time payments, what kind of experience were they having with fraud? But we also did research on international, because there's a lot of markets that have had real-time payments for a long time. And so we looked at 14 systems across 13 countries, and the same thing happened everywhere. It's like there's nothing new under the sun. Everybody had authorized push payment scams, mule activity, and malware. So what we're seeing is not unique. And the scams are both business and personal. Some of the mitigation techniques were obviously new solutions, AI, machine learning, overnight send limits. So that was a scheme that popped up in Brazil where people would get kidnapped in the middle of the night and be forced to do a real-time payment to the kidnapper. So they just did overnight send limits. So if you're going to do a send at 2 a.m., they limited it to $500. Enhanced authentication. Another one that's really interesting is industry information sharing. So in the UK, you've probably heard about this. It's called the Ombudsman, and it's also like a voluntary insurance scheme that most of the banks are participating in. So the Ombudsman does, it's almost like the FBI. They go do a detailed search into some of the larger cases and decide who should hold the liability. So one of the interesting examples I heard was a romance scam. This elderly gentleman, over a period of 18 months, sent the equivalent of $300,000 to somebody. It turned out to be a romance scam. His financial advisor said, I think this is a romance scam. No, it's definitely not a romance scam. That really was hard to convince him. And it was HSBC ended up had to reimburse him $180,000 because the person who looked into it said they should have recognized this, anomalous pattern detection. So what we found in the U.S. is that of the people who responded to the survey, about half had experienced faster payments fraud and half had adopted new types of controls like stronger authentication and machine learning. The top frauds were account takeover scam and stolen credentials, invoice and CEO fraud for business impersonation. And one of the things that, in addition to obviously enhanced fraud solutions, there's an interest in industry data sharing, but there is some obstacles to it. First of all, some banks would feel if they share their fraud information, it's a competitive advantage they're sharing. Or there could be privacy concerns, reputational risk, as well as antitrust. So, I personally think probably the government or the CFPB or somebody will have to step in and sort of pave the way for some sort of industry sharing. It's been done in other countries in ways that you weren't sharing PII in Australia, for example. So, and also the use of a consumer appeals process is of interest. And these are type of things that we hope the FPC will help encourage. And we're not going to run this, but put the idea out there.
Great.
Just to jump on that, one of the things that I've heard from some of my product and technology colleagues is how do you develop the system that detects fraud within seconds? So if I'm going in and keying up a real-time payment, this thing's supposed to go out in 5 or 10, whatever seconds, 20 seconds, according to Fed. Now, how do you get a system to work? If the thing's going out in 20 seconds, how do you get it done by 19 seconds and verified? So that's a challenge.
That's right.
Yeah, and that's where a lot of we're seeing a lot of development on the end user side, and that's when I talked about earlier. I mean, the on ramps to this kind of world is a critical place. So how does the sender really authenticate themselves properly in real time, and in that and in that speed of light that we all
But
need to know.
authentication doesn't work for authorized push payment schemes.
Right.
So
Exactly.
some way to warn beyond.
Right.
I don't know, I've gotten some funny questions like, are you buying puppies?
Yeah, yeah.
Oh, yeah.
So let's talk a little bit about security. Charles, you were thinking with regards to some of the security that's aspect. I guess it's almost very similar to with regards to fraud. But what are your thoughts on the privacy and security and so forth as we see faster payments?
Well, look, this is the biggest friction point for mass adoption right now, especially at the consumer level. It is until we get some really good tools in place that can deal with this real-time fraud in nanoseconds. We're gonna be slow in creating mass adoption. It's going to be these edge cases, these high-value business cases that are tightly vetted and tightly coupled. That Richard's talked about, and I think the industry players and on all aspects of this, a lot of the technology providers, a lot of the payments processors, they all understand it. I mean, it's a race to try to fix that. But there is no good answer right now. And that is unfortunately the big barrier to making consumers and even businesses comfortable with using this type of technology, because when it's gone, it's gone.
Yeah, that's true.
And on the corporate side, we've talked about tokenization, hiding those numbers. In our ISO work, which we kind of touched on, real-time payments a little bit, we wrote a little bit about LEIs, legal entity identifiers, as a potential for, to facilitate some of this or anti-fraud. But, again, that's all conceptual. Maybe they're good ideas, but is it really plugged in yet? No, it's not.
Yeah. In the remaining time that we have, we're going to shift gears just a little bit and have a 1-minute summary. Just like to use just a 1-minute summary to the audience of where you actually see faster payments here and now. Just as if you can just boil down your thoughts, perspective, in a nutshell for the audience. Charles, would you like to start? Well, I know it's a minute though, Charles. Just a minute.
It's in its infancy. We've just got the first inning barely going here. There's a lot to get resolved before we're going to see this. For those of us who are seasoned, think about this like the early days of bill payment. Okay.
Yes, very true. I use that as an analogy. Richard?
All right, there's a lot I'm going to talk about here in this 1 minute, so I'm going to go as fast as I can. First, something we didn't touch on is interoperability between these systems. It doesn't exist now. The limits are different. The coding is different. TCH was not happy with FedNow, and some of that came out recently, so that's an issue. This, unfortunately, could be much of a vanity exercise unless that interoperability happens, and I've seen people say it's not going to happen for 10 years, but it needs to happen. I don't know if they're talking behind the scenes. I hope they are, but that's a huge issue. One of the other issues that I wanted to touch on was the liquidity perspective. So again, you've got to ask your corporate client to fund their account. If they're going to get these vendors that are going to send them a request for payment or want a real-time payment, and it's Friday and you might get that weekend delivery, they've got to fund their account. So a couple things with that. The Fed is now paying interest on these settlement accounts for TCH and RTP or FedNow, as far as I understand. Nobody's asking this yet in the corporate world, but they will, I guarantee it. Are you going to pay me interest on my weekend money? So if you tell me I've got a good funds, my account, I've taken it out of my money market account or an interest-bearing account, and I've put it in my operating account, and it's Saturday, and I'm not sending any money out until Saturday night or Sunday, are you paying me interest? And how is that going to work? Some banks are paying ECR dollars now on weekends, so this is going to be a real issue, and the banks have to think about it from their own balance sheet standpoint, because they're not paying weekend rates right now. They're getting the funds transfer pricing from the Fed, so they get to keep all of it on the weekends. If I'm paying my client 5% and I'm getting 5.5 or 6 or something like that, I'm getting those dollars. But if you got to pay them on the weekends, now you're not getting the spread, so that's going to compress it. And the last thing is, in light of the last banking crisis, what happens when a liquidity run, the potential for a liquidity run for a bank, right? So something bad happens on a weekend. If people can move their money, can they move it? Banks are going to go to the regulators and say, you got to put some guardrails on this. It's going to be the Fed. It's going to be CFPB on the consumer side. A lot to think about there. So that's a whole nother topic we could talk about. So sorry I took up a little more time.
More than a minute.
Wanted to bring that in.
Deb?
Okay, well, in the spirit of this being the Mobile Payments Conference, I'll have one more ad. which is the U.S. Payments Forum. I co-authored a white paper called Real-Time Payments on Mobile, and we kind of think that might be the secret sauce that will really drive adoption. And a lot of those are business, commercial use cases. Just for example, receipt of items on by a manufacturer could scan something and immediately trigger payments, very similar to the freight example. And the combination of all the data that's on the mobile phone to help with authentication and reconciliation in the payment. So that would be my summary.
Thank you. We know that there was a lot more questions that we have for our panel. So today, maybe later after this session or later today, when you see Charles or Richard or Deb, go up to them and ask them your question and find out what their perspective is with regards to faster payments, or anyone else that had sessions today, because as we talked about at the beginning, that it is here and now. It's not future.
Thank you, Wayne.
Thank you.
Thanks a lot, Wayne. Appreciate it.